Hi again everyone, hope you're all doing really well. So this video is a short summary of the recent results released from Wells Fargo, ticker symbol WFC, as well as some of my thoughts on their performance and what is to come from the company. I'm aiming to keep this video brief and succinct because I want to also cover some of the other recent updates, and I'm looking to trial shorter form content on the channel, so please let me know what you think of this. Anyway, let's get into it. So on Friday the 14th of October, Wells Fargo released their Q3 earnings and beat the average analyst predictions by a whopping 19.2%. Wells Fargo posted adjusted earnings for the quarter equivalent of $1.30 per share, when the pundits were only expecting a much lower $1.09 per share. This is in fact the fourth consecutive quarter where Wells Fargo has beat market earnings expectations and is the biggest quarterly outperformance from the bank in over a year. These strong results came from a far stronger quarter-on-quarter rise in revenue of 3.6% than was expected. This year, they achieved $19.51 billion in revenue for this past quarter, up from $18.78 billion for the corresponding quarter in 2021. This allowed the bank to post a nice quarterly profit of $3.25 billion. The main driver of Wells Fargo's earnings was unsurprisingly a 36% jump in net interest earnings, which is booming from the effects of the high interest rates on higher loan balances that most banks are enjoying at the moment. The CFO of the bank expects further rises to net interest earnings in the coming quarters, with the CFO of the bank giving an upward revision of net interest earnings this year from 20% to 24% for the bank. This growth in revenue expectations aligns with the Fed narrative that interest rates will have to keep going up further, with cash rate expectations being upwardly revised recently to 4.75 to 5% to tackle inflation, from what was earlier expected to hit a peak of 3 to 3.25%. So there's still more upward growth to come from interest earnings from the banks, it would seem. Currently, Wells Fargo has a buy rating with a median 12-month price target of $52, which is approximately a 21% premium on the current $43.17 per share price. Given the performance the banks are likely to have in the coming months in a rising interest rate environment, you would have to agree with the pundits on this one. Wells Fargo had a share price above the $52 price target earlier this year, so I do believe it is entirely possible for it again to be realized, as banks in general will likely outperform the broader market in this current climate. These results were perhaps the standout of the bank earnings that were posted on Friday, and with such an upward price target, Wells Fargo and some of their banking peers are likely to be among the safest stocks to be in at the moment. Not that this is investing advice. Anyway, that's about it for this mini update. Are you invested in Wells Fargo or any of the other big banks? Do you agree with the price targets being achieved this year, or are you expecting the broader market to continue to drag the strong performance of the banking sector down? Let me know your thoughts in the comments. Also, let me know what you thought of this shorter form update. Until next time, everyone, may the markets trade in your favor. Cheers.